Maleo, please explain, are we relocating to our own building? We are saying, Betty, give me yes, Betty. Most of the time when you talk about relocation, Betty, most of the expenses are basically capital in nature because you're buying assets altogether. You're buying assets. Most of the costs. However, I'm saying this. However, Betty, if you're told that this location was basically maybe transport, if it's like for example transport moving, then that would be allowable. But however, on relocation, a lot of expenses altogether. Most of the expenses are basically incurred on what? On capital in nature. So that's why most of the cases, when you're told cost of relocating, we will always treat it as non-allowable expense. Non-allowable expense. Betty, I hope I've answered you. Respond with a yes if you're together. Respond with a yes if you're together. Yes, if there's no additional information, then that would be non-allowable. That would be outrightly non-allowable. Sawa. Thank you so much. Are we together? Then we have the next. We have what's called redundancy payment to employees. Redundancy payment to employees. How would you treat redundancy payment? Redundancy payment to employees. Redundancy payment to employees. Redundancy payment to employees. How would you treat redundancy payment? You're laying off, that can be treated as allowable. Then you have investment seminar for the retired. Investment seminar for the retired. How would you go about investment seminar for the retired? For the retired, how would you go about it? Investment. Why do you say non-allowable? If they're in the process of retirement, that would be allowable together. We'll go avoid it. When you're laying off people, are we together? No, it means that retirement is a process altogether. Retirement is a process altogether. Are we together? It doesn't mean that they are fully retired together. So those who are retiring, you can have an investment seminar for them, maybe just to educate them. Are we together? I'm saying, you see, when you say retired, it doesn't just physically mean, it doesn't just mean that investment seminar for the retired employees, it's a process altogether. Sometimes, for example, when you're retiring employees, are we together? You also train them on how they'll basically do what? They'll basically survive outside there. Are we together, everybody? So for those employees who are retired and you're basically incurring costs to basically train them on how maybe to survive, that would be treated as allowable expense. Are we together? That would be treated as allowable expense. Together, everybody. Give me a yes if you're together. So then we have the last one, we call it depreciation. We call it depreciation. Is depreciation allowable or non-allowable expense? So that's outwardly non-allowable. So if you look at accounting profit, this business is basically making a profit of 11,745,000. So which method are we going to apply if you're told to get adjusted taxable income? Adjusted taxable income. So you're going to use that. So I want us to go to the additional information. Though our time is running, we can try and finish this together. So insurance, look at insurance. So we told that insurance cover for imported machinery, insurance cover for the imported machinery against loss on transit. Against loss on transit. Against loss on transit. Then we have insurance cover for the business premise. So insurance cover for imported machinery. Is that an allowable expense? Is that an allowable expense? An imported machinery, investment allowance, that is going to be added to is going to be added to the cost of machinery, and we claim investment allowance. Together, that is going to be added to the cost of equipment of machinery, then we claim investment allowance. So that is non-allowable. Together, team. Betty, I'm saying, if you understand the concept of investment allowance, we are going to add that to the cost of the machinery, and then we claim investment allowance. Together, team. Give me a yes if we are together. Give me a yes if you're together. So then we have what's called insurance cover for the business premise, insurance cover for the premise. How would you treat the insurance cover for the premise? That should be allowable. Then we have next, legal fee. So the legal fee includes 25,000 incurred on drafting a loan agreement between partnership and the bank. Legal costs incurred to draft a loan agreement. What did he say? Legal costs incurred to draft a loan agreement. How do you treat it? Non-allowable expense. That should be non-allowable expense. Are we in agreement? That should be non-allowable expense. So then we have the cost of carriage, the cost of carriage of machine, the cost of carriage of the cost of carriage of machine to the premise, the cost of carriage of machine to the premise amounted to 34. So carriage of machine to the premise. How are you going to treat that carriage? Very interesting. Again, it's an carriage of machine to the premise. Have we used the machine? Yes, you add it to the machine. That should be non-allowable. That machine has not been used. Are we together? That machine has not been used, so that we add it and claim investment allowance. So then we're being told that closing inventory was overvalued by 25,000. Opening inventory was undervalued by 48. How do we treat inventory that has been overvalued? What do you do to closing stock that has been overvalued? Do you have them in the notes? Do we have them in the notes? Do we have valued inventory? So if they're tricky, again, I told you, Betty, if they're tricky, I don't want you to stretch your mind. What was the secret, Betty? Maybe on one area. What is the secret, Betty? If you don't, add and deduct, but not the whole paper. If you find yourself, you don't know where it's going, get the figure, add it, and put it there. Maybe one or two areas when you don't understand, so that you don't miss on that entry, on that inventory, just that inventory. Then what about opening stock undervalued? Opening stock undervalued. What are you going to do to opening stock undervalued? Opening stock undervalued. What do you say? Opening stock undervalued. Opening stock undervalued. Opening stock undervalued. So when an opening stock has been undervalued, what does it mean when an opening stock has been undervalued? How does it interfere with the gross profit when opening stock has been undervalued? If we undervalue an opening stock, what happens to the GP? Jeff, what happens to the GP? Did I teach on that? Did I teach on that? Somebody just to confirm whether I taught on that. Was it taught? I'm saying, was it taught before we say? Was it taught? That is what I was confirming from you. I'm saying, was it taught? Was the concept taught? Perfect, if it was taught. So those are very good instructions. So we say that when you don't understand on those opening and closing inventory, when they are overstated or understated, you are in a panic mode altogether. You are in an exam. What did I say, Betty? Evode. when you're under that circumstance and you don't know where to put it on addition and put it on less, so that you don't miss the end, add and deduct at the same time, so that you don't miss on that entry. Yes, that is why we did, but not the whole paper. Don't make the whole paper that everything you're putting added less. You will appear like you don't know anything. Yes. So this question, I will do it, but I want to spend the better part of the 4 classes. Do you say we've done a lot of calculation? We've revised enough. Who is saying we've revised enough for PFT? Can you say that this class we have revised over and over? I wanted to work on theory because I want this class, I want to have a 95. Somebody who should give us a 95. Is there somebody who's going to give us a 95? I want to work on those theory so that we at least we get somebody on the 90 percentage in this class. So I want the next 4 classes so that I teach you some things on theory. Public finance and taxation. Yes. At least somebody should give Mwalimu a 90 and above. So we can close there. Unless somebody, for our newcomers, you can reach us on our college number. This is our college number, 451 155. So this is Focus Online College. This is Cpa Odongo's number. Yes, you can consult us. This is basically for Cpa Odongo. Yes. You can follow us in our YouTube. You can look at Cpa Odongo, what I've done in the YouTube. You can learn how to get it. Kindly employment question module. I will assist you, Juliet. We will do that. Monday and Saturday. Monday and Saturday. Monday and Saturday. Saturday, we normally have 2 classes, in the morning and the evening. In the morning and evening. 2 classes, morning and evening. So our blocks are still on. Thank you. Thank you so much. Yes. Morning we'll have it at 5. Morning 5 p.m. to 7. So I'm training guys on theory. That is what I want to train you, because I want to balance this paper. Yes. We've done the theory, but I just want to train you. Public finance will revise. Those notes, those videos we just revised. The things that I want us to look at on those theory. So allow the 4 classes we've learned. They have learned a lot. Yes. Yes, they have learned a lot. So you can, our blogs are still on. You can still join us. You can have access favored. You can have access to all the videos, all the blogs once you join. So you can reach us on those numbers. So you can say that God bless you and God bless our class. Unless somebody has something that is burning. Martin, is there something remaining? Something that you need me to say? Martin, do you have anything? Regan, especially for the newcomers. You okay? Regan, do you have anything? Any question? Favored, Musa, do you have any question? Is there anybody with any question? Yes, any question so that you can assist. So we close it there. God bless you and God bless our class. Yes. Yes, I'm giving them today. I'm giving those videos. I'm just settling down and sorting it. I want to discuss some things on those videos I told you. So I must give them today. Yes. I wanted you to go through the other videos. That's why I held them a bit. Yes. Another in the next class. So I want us to pick the first question. That is August 2022. August 2022. That is question on VAT, August 2022. That should be question 4B. Question 4B. August 2022, question 4B. We kick start on that. Question 4B. So if you're there, we respond to the yes. If we are there, then we give it a yes. If you're there, then we give it a yes. So say August 2022, question 4B. So we have it as August. So that is on VAT. VAT, August 2022, question 4B. Question 4B. Question 4B. Are you on it? If you're on it, you give me a yes. If you are on it, you give me a yes. You respond with a yes if you're together. Perfect. So with it, told that Zawadi Associates, Zawadi Associate, Zawadi Associate, Zawadi Associate provides consultancy services to various clients whose terms of contracts allow clients to pay for the services either before or after provision. So terms of contract basically allows the client to pay either to pay for services before or or after provision of service. So then we've been told that the following information is provided regarding the firm's transactions for the month of October, November, December, November, October, November, and December 2021. So then we have the nature of service. We have what we call the nature of service. So number one is audit services to Excel Supermarket, valued at a figure of 700,000. That was payment date is basically November 2021. Are we there? We respond with a yes if you're there. November 2021. Give it a yes if you're together. If we are together. So what is the tax point based on information that we're given? What is the tax point based on the information we have? So based on the information that we have, what is the tax point? What is the tax point based on that information, number one? So the tax point is basically October. So then we have training services to Kyle Security. The value the value of the service is basically 240. The value of service is 240. Then you say not yet paid. The value of services, the service was November 2021, and the payment date not yet paid. So what is the tax point? The tax point. The tax point is November. Perfect. So then we have consultancy. We have what's called consultancy services. And you told what total children's home. So the figure is 600,000. We have December 21. Then the payment date is basically November 2021. So what is the tax point based on that information? But what is the tax point based on that information? So the tax point is basically November. So we're told what total children's home. That's not a charity unless we're told that's a charitable organization. Then you have what you call debt collection service to Zuela, debt collection services to Zuela computers, to Zuela computers. So the figure is 820,000. So we have the service provision date, that is 9th November 2021. Then you have the payment date as 30th November 2021. Then you have the payment date as 30th November 2021. As 30th November 2021. So what is the tax point? The tax point is, for that, what is the tax point? The tax point is November. So then we have strategic plan development, that is Basel in Rwanda. Number one, strategic plan. We have Basel in Rwanda. Mention of Rwanda. How do we call that service? Is it a standard rate service? Is it a zero rated? Is it an exempt? to Basel in Rwanda. Services that are provided, that should be zero rated because that is outside the country. So the figure is basically, the figure is 2,150,000. So we say that service provision is basically 10th November, then not yet paid. So what is the tax point in relation to that? The center, what is the tax point in relation? We have what's called the Shylock investment. So for the Shylock investment, the value of the service is basically 1,440,000. Then the service provision date is basically 13th November 2021. Then we're being told there's an information. There is an information here. The service date is basically there's an information. So we have an information 40% paid, 40% paid on 13th November 2021. So it basically means 60%. 60%. It basically means that 60% was not paid altogether. But in terms of, it basically means that 40% was the one that is paid and 60% is yet to be paid, Is that true, Tabs? Tabs, is that true? 60% is yet to be paid. I hope that is okay. So in relation to VAT, are we going to charge the VAT on the whole figure, or we are going to charge VAT on the 40% that is basically paid? Are we going to charge VAT on 40%, or we are internal control reviewed? So we have what's called the internal control reviewed, that is Lemma Limited. So the figure is the value of the service is basically 960. The value of the service is 960. The value of the service is basically 960. 960. So being told that service provision is basically 18th November 2021. However, if you look at the payment date, the examiner tells us that 10% paid on 7th of October 2021. That 10% was basically paid on 7th October 2021. So 7th October, is it November for that particular entry on internal Zipporah? So Zipporah, what is the tax point? The tax point is basically October, because the earlier is the down payment was basically done on 10th, that is 10% on 10th of October. Perfect. Then we have the last information. So on the last information, we are being told that financial consultancy to W Limited. The total value of the service that is on the financial consultancy, the figure is 1.2 million. The figure is basically 1.2 million. So you have the service provision date as 20th November 2021. However, the payment date is 1st December 2021. So what is the tax point in relation to that financial consultancy to W Limited? Perfect. So look at additional information. So additional information. So on the first additional information, so being told that Shylock investment. So we're being told that Shylock's investment was declared bankrupt, was basically declared bankrupt on 30th November. Is it the whole amount? 60%. Thank you so much. So then we're being told that on 5th November 2021, Zawadi Associate renewed and national training licenses for 30,000 and paid for legal fees. The figure is 360 to follow up clients who are not paying as per the agreed date. So the national training, the national industrial training license of 30,000 and paid a legal fee. How do we treat them? How do we basically treat them? How do we treat them? How do we treat them? So which one is input? Which one is not input? Which one is input? Which one is not input? Which one is input? Which one is not input? So legal fee is basically input. Legal fee is what is an input. So look up additional information number 3. So on the additional information number 3, electricity bill paid, basically in October. So the tax point was basically in October. The tax point was basically in October. So we respond with a yes if we're together. The tax point was basically in October. Are we together? So the next information, so 20,000 in shillings, 20,000 was in respect to additional deposit, was in respect to what they call, was in as demanded by company power. Additional deposit as demanded by company power. Are we going to claim VAT for the deposit? Remember, that's not an advance payment, but the deposit. Are we going to claim VAT on it? Are we going to claim? No, we are not going to claim for the deposit. If it was an advance payment, then we would have. So look at fuel partners vehicles. Fuel consumed for partners vehicle amounted to 90,000 during the month of November. Amounted to what they call 90,000. Amounted to what they call 90,000 during the month of November 2021. How are we going to treat that fuel purchase? Is taxable. Is that okay? That is taxable. The 70% in relation to stock that was destroyed by fire was taxable. However, the 30% was in relation to capital item. So we have 30% in relation, we call it in relation to what? To capital item. So did you get the 30%? Look at the 30%. Stock, look at the 30%. So for the stock, we had 30 and 9,000. So that should be times 39. So what was that figure? Times 39. What was the figure? Times 39. So the figure was 11,700. So this item, 11,700, how do we treat it? Is it a taxable income or a non-taxable income? Because it was in relation to capital item. The 30%, that is non-taxable income. Non-taxable income. So what did you say we should do to it? We need to do what? Deduct, where applicable, unless otherwise stated. What does that statement basically mean? You tell me what that statement basically means. That statement. What does that statement basically mean? As I forward some, is everything understood? Perfect. Perfect. So is everything understood? Perfect. Perfect. So then we go to the required. Compute what we call the VAT payable into bracket or refundable to Zawadi Associate for the month of November. To Zawadi Associate in the month of November. We can open a T account because there's no exempt in this. We can open a T account or we can do them separate. On the next additional information, we're told interest income recorded in the books of bail was gross. Interest income recorded in the books of bail was gross. Output VAT. So we have item. We have items to what we call supply. Supply amount. We have the VAT rate. We have the VAT. We have the VAT rate, and then we have the VAT. And then we have the VAT. Are we able to see that? If we are able to see that, you give one yes. So the first item is audit services. We have audit services. Are we going to include audit services? We're saying for the month of November. So my question is audit services to Excel Supermarket. Is it falling in November. No, it's not falling because provision was October. That is the tax point, so it's not falling. What about training? Training of services to Kylie services. We just noted Kylie services, training, just training by Kylie services. So that the tax point is November. So the tax point for that is November. So we have it as 240, 16 over 116. Give me that. 16 over 116. Give me that. 16. And you say over 16. So you're the guys to support me on that. 16 over 116. Support me on that, team. You're the only guys I have, so there's none that have. So that should be 33, 103. So we have it as 33, 103. 33, 103. So what about accountancy services to a total? Is it falling? Is it falling on November? Which one comes first? The payment. So that is falling on that. So accountancy to a total, rates and insurance. So they told that at the beginning of the year, rent accrued, look up, rent accrued amounted to 24,000. So we have rent accrued. Rent accrued amounted to how much? Rent accrued at the beginning of the year, rent accrued amounted to what? Amounted to accrued brought down, amounted to 24,000. Amounted to 24,000. Amounted to 24,000. Then we're being told that the next, we are being told that the next, and as the 31st, rent prepaid. Rent prepaid. Rent prepaid, call it rent prepaid, that is carried down, amounted to how much? Rent prepaid amounted to 42. Rent prepaid amounted to 42. Rent prepaid amounted to 42. So these had not been adjusted. These had not been adjusted for the accounts. So if you do not adjust this, look up here. Rent accrued brought down. How should you adjust it? How should we adjust the rent accrued? Brought down. Should be 113, 103. 113, 103, 113, 103. So we can move to strategic development. Strategic development. So you have it Basel. And the word Rwanda makes it what? The word Rwanda makes it. A mention of the word Rwanda makes it. Switch off the video, Joy. Switch off the video. So the word Rwanda makes it zero rated. So it makes it zero rated. So the figure is 21. We have it 15. 0. If you multiply that by 0, that should be 0. So then we have the next. We have management consultancy. So how do you adjust prepayment if you have prepaid? How do you adjust? We said expenses paid plus what you call prepaid. We say that prepaid brought down plus prepaid brought down minus prepaid carried down. Look at this is at the end of the year. So this is the prepaid carried down. So this item 42,000 for the rent prepaid should have been deducted, but it was not deducted. So what should we do to the rent prepaid? How should we correct it now? To the rent prepaid. How should we correct it? To the rent that is prepaid. How should we basically correct it? How should we correct it? No. John, think again. How should we? So this item should have been deducted, but it was not deducted. W somebody to give it again, 517. 165, 517. 165, 517. 165, 517. So look up. Look up. Is there any item that we need to adjust with the output? Is there any item that we need to adjust with the output? Budget. Budget. But look up. Look up. There are two approaches to each together, and those two approaches will still work. So when you see, for example, the two approaches, some people will get what's called the output VAT and what? And get the input VAT less, then get payable or refundable is when they less the V budget. It still be the same. It still work out together. It will still work out together. So I'm saying the scenarios, for example, some people will not adjust the budgets here, but they'll get the VAT payable or refundable is when they less the budget in the P&L that you're given. So where are we going to use the input duty? The figure for the input duty, where are we going to use it? The figure for the input duty. Where are we going to use the figure for the input duty? We're only going to use the input duty. We are going to add input duty, import duty. It's say plus the cost of the lorry, cost of what we call lorry, and we do what? This one we're going to claim what we call investment. We are going to claim investment allowance. We are going to claim what's called the investment allowance. We are not going to adjust it. So the cost of lorry, if it was in the P&L, we are going to add it back. However, for the 130, we are not going to add it back because it was not included. We are only going to use the cost, the input duty, add it to the cost, then we claim investment allowance on it. Together, team. Then we claim what you call the investment allowance on it. Perfect, thank you. So then we proceed to the next. We are being told that retrenchment cost analysis. We have retrenchment cost analysis. So if you look at that analysis for the retrenchment cost, we have what you call a provision for staff gratuity. That is 500,000 for the head office. Then for the head office, 800,000 for the head office. Then we have 500,000 for the branch. Then you have what's called the pension payment, 1.7 for the head office, and 800,000 for the branch. How do you treat provision for the staff gratuity? How do you treat the provision for the staff gratuity? That should be non-allowable. What about pension payments? Pension payments. Pension payments. How do you treat the pension payments? That should be allowable expense. Allowable expense. Perfect. So we're going to add back a total of 1.3. That is provision for the staff gratuity. So then we go to the 9, additional information number 9. So we make sure that loss of stock. Look up loss of stock. Loss of stock. Fire risk down a warehouse where goods were being stored before they're transported. Is it 360? Yes, get for me the VAT on that. Get for me the VAT on that. So what is the VAT on that? What is the VAT on that? The VAT on that. So good people, what is the VAT on that? So that is 49,655. 49,655. 49,655. So the next one should be what we call electricity. Electricity. Based on our adjustments on electricity. Based on our adjustments. VAT. Which figure goes VAT? VAT. VAT. So that was 150. So 150. 16 over 116. So get for me that 16 over 116. Get for me that. What is the VAT on electricity? So that should be 2690. 2690. 2690. 2690. So then we have what we call the next, we call it computer purchased. So say it, well consumed by partner, that was private. Computer purchased. Computers. We had a figure of 240. 16 over 116. So what is a computer? So you have it as 33, 33, 103, 33, 103, 103, 33, 103, 33, 103. So then we say that Zawadi, as she paid rent for the month of November, amounting. So we have the rent, 180, we have 16 over 116. 180, we have 16 over. So that should be 24, 8, 28. 24, 8, 28. So what do we have? Is there any item that I've left? Total input VAT. Total input VAT. Total input VAT. So give me the total input VAT. So 128 to 76. Somebody to confirm what some keys are. 128 to 76. 128. 128 to 76 to 76. Respond to this. 128 to 76. So get the VAT payable or refundable. So VAT payable, so what they call refundable. So that is output VAT minus what we call the input VAT. So what is the output VAT? We have that as 473, 931 minus 128 to 76. So get for me that. So what are we getting? Sami kids get for me 345, 655. 345, 345, 655. 345, 655. 345, 655. So that question is done. That question is done. Question is at home, you respond with a yes. If that question is, are we together? That question. Then the second part of it, that theory, it talks about the Zawadi Associate is planning to engage the financial management consultants from South Africa to facilitate online training on financial management. Advise associate on tax point in respect to such services. So we talked about the tax point. Did you discuss the tax point? And been able to talk about what in relation to tax point? How would you advise them? So say it's the earlier of, when service is formed, payment is paid partly or all, only, or invoice is received altogether. Invoice is received, services, whichever happens first, that basically becomes the tax point. That is basically the explanation on that. Together, we respond to this before we move to the next question. Before we move to the next question, we respond with a yes. Before we move to the next question, is that question on the tax point? If you're to advise, that should be at home. Are we together? No, we are not saying importing services. You've been asked. Let me open that question again. So this is basically Zawadi Limited is planning to engage a financial management consultant from South Africa so I'm saying, look up, Zawadi Limited, we're being told that Zawadi Limited is planning to engage a firm of financial management consultants from South Africa to facilitate training on financial management assignment. Advise Zawadi on tax point in respect to such services. Yes, that is more of input. Yes, that is more of input. That is more of input. But now the concept is the same, is more of importing those services. Do you think for import, what do you say about import? The normally, imports are normally? Wait. Somebody say exempt. Imports, when to less. For example purpose, just say add back. You don't need to write this. Some students waste a lot of time writing this. Is that noted? So you don't need to do that in an examination. So we come to this, we just start with the income statement. The first item that we say that is non-allowable is preliminary. We go to preliminary expenses. What is the total for the preliminary expenses? Give me the total for the preliminary expenses. Total for the preliminary expenses. Add the two. 100 plus 30. Are we having 130? That should be 130. We have it as 130. That should be 130. Preliminary expenses, that should be 130. I hope you're together and we're seeing. I've started with the income statement, not additional information. So then we move to the next, we call it goodwill written off. We call it goodwill. The next would be goodwill. We are calling it goodwill written off. So what is the total for the goodwill written off? The total for the goodwill written off. The total for the goodwill written off, that should be 20. The total for the goodwill written off, that should be 20. Then you have the next, what we call depreciation. We have the depreciation. Depreciation. What is the total figure for the depreciation? What is the total figure for the depreciation? So the total should be 250 for the depreciation. The total should be 250 for the depreciation. Then we have interest on overdue tax. Interest, we call it interest, or not called on overdue. We can do this question before we step for break. Can we do this question before we step for break? Yes. So we are being told that Barani Enterprise, we're being told that Barani Enterprise is the value added tax, that is VAT registered business, involved in the sale and distribution of both taxable and exempt supply. For both taxable and exempt supplies. For both taxable and exempt supplies. So the following transactions are recorded in the books of the company. The following transactions are basically recorded in the books of the company. So the following transactions are basically recorded in the books of the company. And say for the month of April 2025. For the month of April 2025. So one, sales at standard rate, that is a figure of 1,160,000. What is that? 160,000. What is that? That's an out. Then we say sales made as exempt supplies, 400,000. So the sales made, we call it sales made as exempt, that is output but now exempted. So then we talk about what's called purchase of stationery on credit, purchase of goods, sorry, purchase 116, purchase of stationery on credit, 116. So somebody asked a question, does credit affect her? Somebody is asking for something, does credit? So let me see what Summit is. Will the credit terms affect? No. Credit will not affect. Even credit we claim on that particular. So then we have the next. Perfect. That was a 10. So then we proceed to the next. We had what we call we had accrued rent brought down. We had what's called accrued rent brought down. That was a figure of 24. Then we had the prepaid rent. We're calling it carried down. That was 42. Somebody can add both of them. It's okay. We can add to make it 6. So that's okay. So then we proceeded to the next on, don't use the lorry. The figure for the import duty for the lorry, we need it for investment allowance. It was not included in the P&L, so we do not adjust it. It was not included in the P&L, and so we do not adjust it. But have provision for staff, we call it provision for what we call for staff gratuity. Provision for the staff gratuity, that should be a figure of 1.3. That should be a figure of 1.3. That should be a figure of 1.3. Then you have VAT on loss of stock. VAT on what's called on loss of what it calls stock. VAT on the loss of stock, that was we had 16 over 116 times 700,000. What was the figure that we are getting? Good people, what was the figure that we're getting? VAT 58, payment of entertainment, entertainment expense for a client, payment of entertainment expense for the client, that is 58. So entertainment, VAT Act for 2013, entertainment, accommodation, catering, how do you treat them? VAT Act 2013, entertainment, how would we? That should be exempted. Together, team, that should be exempted. Are we together? That should be exempted. Perfect. So then look up next. Purchase of saloon car for director. Purchase for saloon car for directors. 1,160,000. 1,160,000. How would you treat that? 1,160,000. So, director, is that a business expense? Is that a business expense or a private expense? That's a private expense. Now tie it to the saloon car fuel. So if you tie it to a saloon car fuel, what does now the saloon car fuel basically means? Saloon car fuel. So it becomes also a private expense altogether. Are we together? So it's also exempted from VAT because that also becomes a private expense together. Give it a yes if you're together. Give it a yes if we are together. Are we together? Sometimes those who set exams, Now I've said I have changed it. Yes, I have changed it based on, you see, when sometimes I change the question, it is based on something that was examined and did not do. So When markers are marking those papers, they're corrected together. They're basically corrected together. You see, sometimes we say that sometimes are we together? Mercy. Sometimes when I change questions, I just bring another notion, maybe something that you did not see as you are we together? Mercy, are you together with me? That is what I'm saying. Are we together? Yes. So the fuel, it becomes non-deductible, restricted or non-deductible. The word is non-deductible. The word should be non-deductible input VAT. That is the correct one. The non-deductible input VAT. Together, Sami kids. The word is non-deductible input VAT. The word is non-deductible input or restricted amounts, particular. Non-deductible input VAT or the restricted amount. Is that not the Zipporah? Give me yes, Zipporah, if you're together. Yes, that becomes the correct one for it. So then we proceed to the next. We have been told that imported raw materials with custom and VAT paid, imported raw materials with customs and the VAT paid. What is the VAT paid? And the VAT paid, look at that, and the VAT paid was shillings 230. We have it as 230, and the VAT paid was 232,000. Imported raw materials with custom and VAT paid was basically, we have it as, and the VAT paid is 232. Then you have the next, we think of repair. Repairs, we have it as a repair. We have it as repair. To deliver a truck, to deliver a trucks, used exclusively for distribution. Delivery trucks used exclusively for distribution. That is 58,000. Then we have what we call purchase of goods. Look at this, purchase of goods. Purchase of goods. So we call it purchase of goods. Used in both, look up, used in both and taxable supplies. To that point, are we together? Perfect, we're together. So if you're together, that should be okay. So we have investment allowance. We have investment allowance, should be okay. So we have investment allowance. We have investment allowance. What's taxable supplies? That's a very interesting one. Exempt and taxable supplies. Exempt and taxable supplies. So we say that used for what we call used for goods purchased, we say for both taxables and exempt supply, 348. How would you deal with this? So on this figure, what should you do with that figure? If we talk about that figure, there should be apportionment. That should basically carry apportionment. We call it apportionment. So that figure should basically be apportioned. So rent for business premise, rent for business premise to a landlord registered for VAT, shillings 116. Shillings 116. Oh no, all amount for both. Yes, we are supposed to apportion because on that amount we're saying that both exempt and taxable supply. Are we together? What should we allow? We should allow for the taxable supply. Are we together? Yes. So we've been told that rent for business premise to a landlord registered for VAT, shillings 160. So what is that for that rent as the last information? For the last information for that. So that's an input. I want us to read additional information and be very keen on those additional information as I read those additional information. Kindly, I want us to be very keen. So the first additional information. So it means that company uses turnover-based apportionment on the mixed item. So it uses what? Turnover. Do we understand that? A company uses what we call turnover-based apportionment. Can we add it together to figure this into less? So the figure that we need to less, that should be 30 plus 11,700 plus 600,000 plus 180 plus 200 we have plus 120 then plus 832,500. What are we getting? What are we getting? What are we getting? Are we getting 1,746 to 30? 746 to 30. Sorry, that shouldn't be to 30. 30 plus 11,700, 600,000 plus 180 plus 120 plus 200 plus 832,500. So are you getting 1,974, and we're having it as 200. Are you getting that? 1,974,200. Is that what you're getting? Confirm that, kindly. Perfect. So then we can wrap this part. We have it as the adjusted. We call it business profit. So what is adjusted business profit? So we had 6,974,200. So are we having 10,071, 352? If you have that, give me yes. 10,071, 352. Confirm that. Perfect. Then you say add other incomes, add other incomes that are subject to taxation. Which are these incomes that are basically subjected to taxation? These incomes that we're going to subject to further taxation. Which are these incomes that we're going to subject to further taxation? So we have interest income from Lex Bank. So we have the interest income, Lex Bank. So the figure that you have for the Lex, is it gross or net? The figure that you have for the Lex, is it gross or net? The figure that you have for the Lex, is it gross or net? The figure that you have in the P&L, is it gross or net? So the figure that you have for Lex, it is gross. So you add the 180. Then you have what's called interest, beta microfinance, beta, we call it microfinance. We have the beta microfinance, that should be 200. That should be 200. So that should also be. So then you have what's called the total taxable income. So what is the total taxable income? Get for me that total taxable income. What is our total taxable income? So the total taxable income should be, we have it as 10,451, 352. So we finished the first part. 10,451, 352. So perfect. Is there anybody who has not understood anything in that part one? Perfect. Is there anybody who has not understood anything in that part one? Unanimously, can you say we are together? Supplies, we just say exempt supply. What is the figure for the exempt supply? The figure is it 400,000? So we have a dash and a dash. So what is the total output VAT? Total output VAT. What is the total output VAT? Give me the total output VAT. So the total output VAT is 1. That gives us 160. Together, that gives us a figure of 160. Are we together? So with that, the end point is this and this. So if you do that, that you have your 2 marks. Is that 2 marks a walkover? That 2 marks, is it a walkover? So take a breather, we come back. I want us to take a breather, and we come back. Take a breather, then we come back. Oh, everybody's in. So we get to the second part. We get to the second part. We get to the second part. Together, we get to the second part. We get to the second part. So we're being told that determine total input VAT incurred and identify which amounts are restricted under VAT Act of 20. We have it of 20 of 2013. So we get the total input and get the ones that are restricted, amounts that are basically restricted. Total input, and we get input and we get amounts that are restricted. So we have items, to what you call supplies, supply, we have amount, we have the VAT rate, and then we have the VAT, and then we have the VAT, and then we have what you call the VAT. Together, team, and then we have the VAT. So our focus is on the input now, total input. From there, we shall be able to identify. First of all, we get the total input. Together, team. First of all, we get the total input. We respond with a yes. So purchase of goods for resale. Purchase of goods for resale. So we have purchase of what we call of goods for resale. So purchase of goods for resale. The figure is that is 580. What is the VAT rate? 580. VAT rate. What are we using as our VAT rate? 16 over 116. So we have 16 over 116. So get for me that. Get for me that. So get for me that. So that should be 80. So 80. So you have stationaries. So what is the figure for the stationery? So that should be 116. So what do you have? 16 over 116. Give me that for the stationery. Somebody says 16? 16K. Somebody gives it a 16K. So saloon ka fuel. Well, we had it as 80. 87 times 16. Get it? What does it give us? We get it first of all, and we note that is. What is the figure? Just so 12K. So 12K, just note it here. Restricted. This is one of the restricted. This is based on VAT Act, non-deductible or restricted. So then we have the next entertainment. The next entertainment. Restricted. Then you have saloon car purchase of saloon car for director, saloon car for directors, for directors. Institutions that we say that accepts. We say accepts what we call deposits from the economy, that accepts what we call deposit from the economy. economy, that accept deposit from the economy. And how do they accept deposit from economy? Through customers deposit, through what we call customers deposit, through what we call the customers, call it the customers deposit, deposits, and you say, and give out, gives out loans, and what we call and advances to those sectors. We say to those sectors that we say that have, we call it have what we call a deficit, and gives what we call loans and advances to those sectors that basically have a deficit. Is that definition at home? If that definition is at home, you give Mwalimu. So a bank is a financial institution. Taxation of a financial, one of the financial institutions known is a bank. We have insurance. But you say that a bank is an institution that basically accepts deposit, accept cash, or we just say accept what we call cash. Cash, we say from the economy through what we call a customer's deposit, and they give out what we call loans and advances to those sectors that experience what we call a deficit. Give me a yes if you're at home. If we are at home, you give it a yes. So how do you tax a bank? The next question is, how do we tax the banks? How do we tax what we call the banks? How do we tax the banks? Remember, these are companies altogether. Remember, these are companies. Understand, we have residents altogether. We have them resident banks, resident banks that we tax at corporate rate of 30, corporate rate of 30%. We have corporate rate of 30% altogether. So when you have the resident banks, we tax them at corporation rate of 30% altogether. Then we have for the non-resident, we have the being taxed at that 7.5%. The being taxed at that 7.5% altogether. And remember, I told you that whatever we are doing, it falls back to the basics that we did. So in order to tax the bank, then we need to determine what to call the taxable income. Can you tax the bank without determining the taxable income? You must determine the taxable income altogether. So taxable income for the bank, we need to understand that taxable income, you're saying for the banks, taxable income for the banks is determined. The word is determined, and you say as follows. So taxable income for the bank is basically determined as follows. The same concept that we did altogether. So we can use what you call the gross profit method. We can use what you call the gross profit, we call it method. We can use the gross profit method. And number two, we can use what we call the net profit method. So we can use what we call the gross profit method, and we can use what we call the net profit method. Are we together? So when do we use the gross profit method to determine the taxable income for the bank? When do we determine the gross profit method to determine what we call the taxable income for the bank? When do we use the gross profit method? When the accounting profit is not provided. For the net profit method, we use it when the accounting profit is provided. So we are I'm repeating. Get for me that, then I repeat. Rent. Get for me for the rent. So for the rent, it's 16. So when you talk about restricted, based on the VAT Act of 2013, are we together? Based on the VAT Act of 2013, we're saying that they are expenses that we cannot offset against the output VAT, and we call them the non-deductible input VAT. A given example, we talked about catering, accommodation, we have accommodation, entertainment, and then we have the private expenses. That is explanation. Joy, are we together? Joy, if you're together, we respond with a yes. Joy, are we together? Thank you so much if we're together. So then we have the option, but remember, I've not put the lookup because that basically we need to apportion altogether. That has to be a portion. So the question is, lookup team. Now I tell you why this question. Yes, section 17. So look at this. Look at why this question is such a simple, but then look at its 3 marks. Are you seeing this? Three marks. Are you seeing this? So the question, determine the total input. I know some people are wondering if they want determine what you call the total input in card and identify which amounts are restricted under the VAT Act altogether. So the question, total input, that's why we did this. Then from that, we can basically now get the restricted. Ariet Manipata, Mercy, are we together? Mercy and Ariet, are we together? Naomi, are you there? I hope Naomi is there. Sami, we call it interest, income, and you're saying from all sources. From all sources. Interest, income from all sources. So it means when you talk about interest income, it is not limited to customers only, loans to customers. Are we together? Interest income from all sources. Are we together? So, and you say that including investment interest, including, e.g., including what's called investment interest. Do you know that the bank will also invest in government bonds, treasury bills and bonds? Are you aware? Investment in interest income. Do you know that the bank also invests in treasury? Investment interest income. Treasury, government bonds. Did you know that? That the bank also would, one of the sources they invest in the government bonds particularly. So say, which are considered as operating income. Which you say which, we say are considered, the word is considered as what you call as operating, which are basically considered as operating incomes. So which are basically considered as operating income. I want us to break them down. Are we together? I want us to break it down. But before I break it down, if, for example, interest income from outside the country, interest, if you had interest income, we say from what you call from outside the country, How would you treat it? Because this is a concept that we talked about. What about interest income from outside the country? How would we treat that before we break that down? Then, how would we treat that? Interest income from outside the country. How do you treat it? Interest income from outside the country. Is that also an operating income for the bank? What did you say, interest income from outside the country? So this is tax exempt. You need to understand that this is tax exempt, meaning we don't charge tax. Give me yes if you get left. We are very sorry. Then we have we had the purchase of what we call goods. This is the mixed. So mixed was basically 348. So we have 16 over 116. So what is that figure? But we need to know that this should be apportioned. So get for me that. So get for me that mixed. That should be 48. So that should basically be apportioned. So the essence of this, why have I done the whole thing? Why have I done the whole thing? Because the examiner says, determine the total input VAT. I know guys were wondering, determine the total output VAT. So we give everything away together. That's why we've gotten that. Is that understood, Zipporah? So now we get to the other part and tell us which amounts are restricted under. Which amounts are restricted? Amounts restricted. So now we go to amounts restricted. So we go to the amounts. We call it amounts. Amounts restricted. Restricted. So the amounts restricted, we have saloon car fuel. Amount restricted is 12 that. Then we have entertainment. Entertainment. Entertainment is 8. Then we have what we call purchase. Saloon car for director. Saloon car for what we call for the directors. So what is that figure? Purchase for the saloon car for the director. So what is 160? So what is the amount restricted? Get for me the amount restricted. Get for me the amount restricted. What is the total amount that is restricted? The total amount that is basically restricted. The total amount that you say is restricted. Fact, non-taxable. Then you have discount on bills discounted. Discount. So we call it the discount. Mark this discount for what we call for the bills. For the bills discounted. Discount for the bills discounted. Call it bid discount for the bills discounted. So when you talk about bills, discount for the bill discounted, these are basically cost. We call them cost incurred for receiving money before the bills is due. So cost that is incurred for receiving the money before the bills are due. Are we together? Incurred for receiving money before bills are due. So we call it discounts for bills discounted. Together, team. Respond with yes if we are together. We respond with yes. So master that. Don't forget about what I taught you on the basic. Add it to that. So as we go for a break, we have what's called, we come and proceed. As we take a break, we come and proceed from, we call it additional. Now we're introducing what's called additional. We are calling it additional. We're calling it additional. Additional allowable expenses. Allowable. We're calling it allowable expenses. Additional allowable expenses. Don't forget about the ones that we did. So we can take our break. Is that okay? Then you come back. Is that okay? If that is okay, we keep this. Is the network okay today? Is there any issue with our network today? Augustus, is the network okay? I hope it's okay today. Yes. So then again, for the videos that are not very clear, I'll give you videos. Are we together? So you can just note them. For those who are having challenges on videos, are we together? Yes. Fluctuating. I thought it should not fluctuate, but it's okay. So I'm saying for those who are experiencing anything challenge, we don't need to get the VAT again. Imported imports. It was with VAT. Import with VAT, that should be 32. Respond to the yes if you're together. Import with VAT, that should be 32. Then we had what's called repairs. We had repairs. What is the figure for the repairs? We have it includes. We have it includes additional allowable expenses. We say number one, it includes interest. on customers' deposit. So we call them interest expense. We have it as interest expense. Interest expense. Number one is interest. We call it interest on customers. Interest on customers. We call it deposit. Those customers that who put money in fixed deposit account. Interest on customers' deposit. Are we together? Then interest on deposit by other bank. So we have other banks depositing interest on what you call on deposits by what you call by other banks. Interest protection fund. Contribution to the deposit protection fund. We call it contribution to the deposit protection fund. And then we have the next, realized foreign exchange loss. Realized, what you call the realized foreign exchange. We call it the realized foreign exchange loss. The next is what basically called the realized foreign exchange loss altogether. What about unrealized foreign exchange loss? How do we treat unrealized foreign exchange loss? How do we treat the unrealized foreign exchange loss? How do we treat the unrealized foreign exchange loss? How do we treat, Walter, the unrealized foreign exchange loss? How do we basically treat the unrealized foreign exchange loss? So those are non-allowable expenses. Then you say loss of disposal for security, loss of disposal of security, loss, mark the word loss, on what you call disposal of security for loan. Loss on the disposal for the security for loan. So we call it loss on disposal of security, but basically was standing in for loan. Then you have rebates, rebates on bills discounted. We call it rebates on the bills discounted. These are basically income that are supposed to be earned in the future. So those should be a deduction from the taxable income altogether. An income, these should be earned in the future. So a deduction from the income. So we call them rebates on bills discount. So that's another allowable expense. Together, team. That is. If we can proceed to the next illustration, we go to our first illustration. So illustration or example one for the bank. So we have it as the deck. We have it as the deck 2020. It was it 160 minus input, which is 186, 286. So it's a VAT refund. What is the refund? When you talk about VAT refund, what is the refund? Give me the figure for the refund. $26 to $86. 26 to 86. Sammy kids, where should I pardon you? Where should I pardon you, Sammy kids? Is it on this? We said that look up. So for the goods, purchase of goods in both exempt and taxable supply was 348. So we got the VAT on it was 48 altogether. But the deductible or the VAT that you can claim for that, we apportion. How do we apportion? We say taxable supplies over total supplies. So for the taxable supply, because we don't have zero rated, yes, not 104. Exempt was 400,000. Sammy kids, exempt was 400,000. So we have 1.4. Sammy kids 1.4. So standard rate was $1 million. Exempt was 400,000. So we have a total of 1.4. So a million over 1.4 times 48 to get the deductible input VAT from the mixed purchase that were exempt and taxable, we get 34. So we get the total input to be 186, 286. So we're getting a refund of 26, 286. Sawa sawa. 15 marks. To conduct what's called a tax compliance review ahead of the scheduled Revenue Authority audit for the year ended at 1st December 2024. So being told that the following data was extracted from the book from the bank's trial balance for the year ended 31st December 2024. So interest income from customers' loans. Interest income from customers' loan. How do you treat that? Is that a taxable income or a non-taxable income? Is that a taxable income or a non-taxable income? When you're told interest income from customers' loans, that should be a taxable income. Perfect, that's taxable income. Number two is interest income from treasury bonds. Interest income from what we call from the treasury bonds. We call it interest income from the treasury bonds. What is that? Is that a taxable income or a non-taxable income? That should be a taxable income. Taxable income. Taxable income. Somebody says non-taxable, that should be a taxable income. Then the next we have what's called interest income from interbank placement. Interest income from interbank placement. From interbank placement. Interest income from the interbank placement. That should also be a taxable income. A taxable income. Then the next we're being told that fees and commission income. Fees and commission income. Fees and commission income. You just look at what we've done. Fees and commission income, that should be a taxable income. Then we have the next. We're basically being told shopping mall lease rental income. Shopping mall lease rental income. Shopping mall lease rental income. What gets into your mind? An examiner tells you shopping mall lease rental income. Shopping lease rental income. So those are other incomes. But you know that rental income is other income that is taxable together. Monica, we together? Those are other incomes that are subjected to taxation. Thank you so much. So then we go to the next, what they call the loss. We call it loss on disposal of fixed asset. Loss on the disposal of fixed asset. Loss on the disposal of fixed asset. So unless it's used as security, unless are we together? Unless it's used as security. So then we have what we call treasury bills discount income. Treasury bills discount income. Treasury bills discount income. That should be a taxable income altogether. That should be taxable income. Are we together? I've said treasury bills discount income. That should be a taxable income. Together, Walter. Augustus, that should be taxable income. So then we proceed to the next. The examiner tells us that loss on disposal of investment security. Loss on investment security. On investment security. Investment security. Investment security. That should be allowable expense. They've said investment security. It's not general altogether. If you're told, for example, loss of when you talked about loss of, we talked about the concept loss on disposal of security for loan altogether. That should be allowable. So then we move to the next. We're being told staff salaries and wages. How do you treat the staff's salaries and wages. Staff salaries and wages. That is outwardly an allowable expense. So then we have what we call depreciation and amortization. Depreciation and amortization. So that is outwardly non-allowable expense, non-allowable expense. So then we have the next, administrative and operating expenses. Administrative and operating expenses. Administrative and operating expenses, that is allowable expense, allowable expense. So then we have what we call the next, we have what's called cost of generator. Cost of generator. That's a capital expense. We claim investment allowance at what rate? Remember, this is not manufacturing. So if you have generator, but it's non-manufacturing, we claim investment allowance at what rate? At the rate of 10%. Note that the manufacturing, we claim the investment allowance at 50%. However, if you look at the banks are non-manufacturing. So basically, we claim investment allowance at the rate of 10%, at the rate of 10%. Then we have the next either before or after provision. So terms of contract basically allows the client to pay, either to pay for services before or after provision of service. So then we've been told that the following information is provided regarding the firm's transactions for the month of October, November, December, October, November, and December 2021. So then we have the nature of service. We have what we call the nature of service. So number one is audit services to Excel Supermarket, valued at a figure of 700,000. That was basically the service provision was on 25th October. Then the payment date is November 2021. The payment date is basically November 2021. Are we there? We respond with a yes if you're there. November 2021. Give it a yes if you're together. If we tax for ATD and comes, you'll get an information legal fee without additional information. However, for PFT and advanced tax, you'll not get a question like that. So when you have legal fee, so the tax point is basically October. So then we have training services to Kyle Security. The value in the service was November 2021, and the payment date not yet paid. So what is the tax point? The tax point is November. Perfect. So then we have consultancy. We have what's called consultancy services. And you told what total children's home. So the figure is 600,000. We have December. The service provision is basically 5th December. We have it as 5th December 2021. Then the payment date is basically November 2021. So what is the tax point based on that information? But what is the tax point based on that information? So the tax point is basically November. So we're told what total children's home. That's not a charity unless we're told that's a charitable organization. Then you have what you call debt collection to Zuela, debt collection services to Zuela, computers to Zuela. Is it rated? Is it an exempt? Is it an exempt? To Basel in Rwanda. Services that are provided, that should be zero rated because that is outside the country. So the figure is basically, the figure is 2,150,000. So we say that service provision is basically 10th November, then not yet paid. So what is the tax point in relation to that? Jacinta, what is the tax point in relation to that? So the tax point is, based on that information, the tax point is, what is the tax point? The tax point is November again. So look up, look up. So the management consultancy, we have Shylock investment. We have what's called the Shylock investment. So for the Shylock investment, the value of the service, there is an information here. The service date is basically, there's an information. So we have an information 40% paid, 40% paid on 13th November 2021. So it basically means 60%, 60%. It basically means that 60%, 60% was not paid altogether. But in terms of, it basically means that 40% was the one that is paid, and 60% is yet to be paid, yet to be paid. Is that true, Tabs? Tabs, is that true? 60% is yet to be paid. I hope that is okay. So in relation to VAT, are we going to charge the VAT on the whole figure, or we are going to charge VAT on the 40% that is basically paid? Are we going to charge VAT on 40%, or we are going to charge VAT on the whole amount? So we're basically going to charge VAT on the whole amount. We are going to charge VAT, and we say on the next, we're being told that basically 960. The value of the service is 960. The value of the service is basically 960. 960. So being told that service provision is basically 18th November 2021. However, if you look at the payment date, the examiner tells us that 10% paid on 7th of October 2021. That 10% was basically paid on 7th October 2021. So 7th October 2021. So what is the tax point in relation to that information that is given? What is the tax point? Is it October? Is it November for that particular entry on internal Zipporah? So Zipporah, what is the tax point? The tax point is basically October, because the earlier is the down payment was basically done on 10th. That is 10% on 10th of October. Perfect. Then we have the last information. We have the last information. So on the last information, we are being told that financial consultancy. We are being told that financial consultancy to W Limited. The total value of the service that is on the financial consultancy, the figure is 1.2 million. The figure is basically 1.2 million. So we have the service provision date as 20th November 2021. However, the payment date is 1st December 2021. So what is the tax point in relation to that financial consultancy to W Limited? Perfect. So look at additional information. So additional information. Basically declared bankrupt on 30th November 2021. How do we deal with the bankruptcy? Was basically declared bankrupt on 30th November 2021. On 30th November 2021. How would you deal with the bankruptcy? That bankruptcy. We are going to claim a budget relief on that. We're together. We are definitely going to claim a budget relief on it. Are we together? So the budget relief is basically going to come on. What amount is going to be a budget relief? The percentage that we are going to claim budget relief is a figure of, is it the whole amount? 60%. Thank you so much. So then, so I can stop it there for today. Can we read additional information number 3, or we stop it there? Do you have the patience so that I can analyze the additional information number 3, or we stop it there? Do you have the patience for additional information number 3, or we stop it there? It's up to you. You want us to analyze all? We can go all. Yes. So we go to 3. Very interesting. So we have number 3. We're being told that loan impairment provision. Look up. Loan impairment provision comprised of 10 million for specific bad debt and 16 million as a general provision. So we have 10 million for specific bad debt and 16 million for general provision. Only that. Are we together, Walter? Only that. Then let others who join on Friday to also get that part. So 10 million is allowable. In that case, we allow a specific provision. So 10 million, you round it to 1,000. This is allowable. What about general? How do you treat the general? The general is treated as non-allowable. Let others, and God bless our class. Unless somebody has a question that is burning, I would wish to stop at that point. I would wish to stop at that point. Thank you, JK. Thank you, Agnes. So we start from where we had stopped. So we start from. So additional information. Were we able to finish on the additional information? So we can start from the additional information number one. So we were able to analyze the P&L. So we move to the additional information number one. So we just start additional information number one. So being told that goods sold, goods worth 600,000 were transferred from the head office to the branch below the selling price. What did you say on that additional information number one? Goods worth 600,000 were transferred from the head office to the branch at 10% below the normal selling price. No adjustment to that item altogether. Those are activities between the branch and the head office altogether. Then you're basically being told that 70% of the insurance recovery, 70% of the insurance recovery, we are told that 70% of the insurance recovery was in respect of stock destroyed by fire. Then the balance was on capital item. So when you looked at our insurance recovery, that was our working one. We called it insurance recovery. We called it on insurance recovery. So 70% was in relation to stock. So the 70% that was in relation to stock, taxable. Is that okay? That is taxable. The 70% in relation to stock that was destroyed by fire was taxable. However, the 30% was in relation to capital item. So we have 30% in relation, we call it in relation towards to capital item. So did you get the 30%? Look at the 30%. Stock, look at the 30%. So for the stock, we had 30 and 9,000. So that should be times 39. So what was that figure? Times 39. What was the figure? Times 39. So the figure was, so this item, 11,700, how do we treat it? Is it a taxable income or a non-taxable income? Because it was in relation to capital item. The 30%, that is non-taxable income. Non-taxable income. So what did you say we should do to it? We need to do what? Deduct. So basically with this, we deduct because the profits were overstated. What do you say have been stated inclusive of VAT. Salaries. So being told the staff salary includes provision for leave accruals equal to a third of the total salary for head office and the branch. So when you're told staff leave accrual, provision, we're being told that provision, the examiner tells us provision for leave accruals, So how do you treat provision for leave accrual? All provisions in taxation, how do you treat them? Would you say provision for the leave accruals?